YouTubers, it's me, Mike Martins here from the Mike Martins channel. Guys, don't forget to join us tonight for Trends in the Housing Market. Go on the channel and set your reminders. Don't forget to set your reminders for Trends in the Housing Market. Okay, guys, the lifelines, the plugins. I don't know if you remember a few months ago, and then after a year before that, I made a video discussing how our housing crisis that we're in, or housing affordability issue, basically what we created was Frankenstein's monster, Victor von Frankenstein. And a lot of people did not know that Frankenstein was the doctor, not the monster. But we've created, who created? Is it governments? Is it agencies that direct where things are going to go? Is it our finance minister? Who really is doctoring or moving things forward to keep this Ponzi scheme going? Well, we've had a bunch of lifelines. First-time homebuyers loans, interest-only mortgages, zero down, 100% loan-to-value, blah, blah, blah. They've tried everything. The only thing left in the toolbox, because they can't go any lower, they're going to lower interest rates, but the only way they could do this is to go cashless, so you don't see a runoff on the banks, and people go ahead and then they go ahead and go into negative interest rates. They're already doing it in parts of Europe, so it's nothing new, but they're thinking of going negative. They're going to go cashless first to be safe, and there might be a gold confiscation from what I heard, and in Canada, though, and in Australia. So there might be a gold, and Argentina, there might be a gold confiscation in those countries. So they might confiscate gold and actually keep that balance like that in a way, or keep it a balance going. You guys know where I'm going with this. If you're jumping on the bandwagon, welcome to the channel. Lots of love. Don't forget to subscribe. So here it is, guys. Bank of Canada worst case scenario is here, except for the 40% drop in house prices. This is from our friends over at Better Dwelling. Don't forget to check them out. I've been reading articles from these guys for years. Canada's central bank flooded real estate markets with cheap cash when the pandemic hit, and we may know why. So, guys, there's been an affordability issue already in, let's say, the province of British Columbia, where less than 1% of the population could only get into a first home buyer situation. Less than 1% of the population could get into a first time home buyer situation. The province of British Columbia cannot find first time home buyers because Canada sold itself out to China and Chinese investors. They shadow flip homes and they bring in more Chinese to fill in the gaps when Canadians can't afford their own properties. They've even sold condos in Shanghai, like they've demonstrated and had release dates or release parties for condos, but in Shanghai. So if you wanted to buy a condo in Vancouver, you'd have to go to Shanghai office to actually buy one. I'm not making this up. And they made fun of the people. They made fun of us, saying that Canadians can't even afford to buy in their own country, laughing at us and making fun of us. They actually did that. You could look it up. It's on. You could look up my videos. It's there. So they made fun of us because we can't even afford to buy our own property, and they were buying us up. There's people that live in China that own 300, 400, 500 properties, and they have never been to Canada once, but they want to park their money somewhere safe. So, and what is that? What has happened? Well, it's deprived the locals, and I think the border closure between Canada and America, I think it has to do with more Canadians moving to the United States because of massive affordability issues in Canada. So this is the BLC Models and tests the resilience of banks with outlying scenarios. The Bank of Canada regularly models hypothetical situations to the test of the resilience of the banks. In this case, they worked with the IMF to test against the extreme hypothetical situation, while extreme is also considered possible, so it has a real value. Now, to clarify, that isn't a forecast for what happens. However, it's an educated group of indicators that often accompany each other. So back again, we've already went through the possibility scenarios on this channel through housing for many years now on trends in the housing market and housing videos that I did. And a lot of it didn't go through because we're not going through textbook 101 business that we learned in basic business that we learned in high school. Whatever you learned or whatever you thought you knew about business, throw it right out the window, because they always have their smoke and mirrors, and they're always finding a way to create a way to keep this going, right? Economies don't work in a vacuum, so typically there's a cascading effect. Usually a drop in consumption leads to a loss of employment, right? That drop of employment feeds further loss of consumption eventually that impacts how much people can pay for a home. The exercise isn't a forecast that gives us an interesting insights of how an economy is expected to work. The point is actually determine if banks can survive a worst case scenario. Spoiler, they can. It's just not pretty. So, okay, hold on. But the question is, let me ask this question to Better Dwelling. Has foreign investing made such an impact? Because you guys, Better Dwelling has the article themselves where it says Canada would be in a recession if it wasn't for money laundering. Now, my question is there enough foreign investing in Canada, basically, that even if the locals lose their jobs, it won't make a ripple effect, or it won't make too much of an adjustment in housing because the locals don't own their homes anymore? I mean, there's local people that own their homes, but they're unhinged and they're ready to fall off because of what's happened with this COVID. So that's my question to you guys, Better Dwelling, if you could answer this. Is there enough foreign ownership in the country that it doesn't really matter what happens to the local Canadians or the local Australians too? Australians are in the same position we are, so are New Zealanders, and so are you people in the UK, right? So here's the adverse scenario. Is the worst recession Canada has seen. The Bank of Canada's adverse scenario outlined in 2019, Canada's GDP took a hit, unemployment spiked, and house prices tanked. The scenario sees Canada's GDP dropping 8.2%, unemployment peaking at 12.6%, and housing prices dropping at 40.9%. Will they allow it? They could do anything they want. Anyone that controls the breakers, the switches, the purchases, the mortgage-backed securities, will they allow this? They also assume a duration of 7 consecutive quarters. This scenario is much worse than any other previous scenarios Canada has seen. In fact, they're testing for what seemed like a near doomsday scenario. So this is table 1. The risk scenario is more severe than of the previous 3 recessions. So here it is. There's your decline. Okay, decline in real GDP to peak. So there's your scenarios here. There's the 81-82 recession, if you guys remember, when Ronald Reagan raised interest rates to like 13% or 9%, and Canada followed suit. There's your other 90-91 recession, pretty much every 10 years. 2008, 2009, you didn't get much because you had a bigger, the economy was a lot bigger than it was back in 81, 82. But it was a little bit of I don't know, a little bit of a refresher. And then you got this is the adverse scenario we're in right now, 8.2%. So there it is, recession duration. So looking at 7 quarters, so consecutive quarters of negative growth. So it's definitely going to be, this is no surprise here, 81, 82. So check your history, guys. Unemployment rate and increase through peak percentage points. There it is. This is obviously higher, but this has already been happening for a long time now, right? Where affordability for employers to keep employees because the price of property tax was going up, and a lot of employers couldn't keep their employees, right? So peak unemployment rate, 12.6%, and there it is, and then got 13% back in 81, 82. House price correction peak through, there it is right there. So you start at 9.8%, 6.6%, 7.8%, and it needs a 40.9%. And here on the show, we calculated the average TDS, we calculated average incomes here, and I made videos about it, and we discussed that housing, for example, in the city of Vancouver, it needs to go down 62% for the average wage earner to get in. Toronto, 59.8%. Sydney, Australia, I think it was like a whopping 71%. And all these other places, because you have to factor in the cost of taxes, food, transportation, all that other stuff, right? So that 40% is nice, and it's a good start to start getting in first-time home buyers, because without the fresh blood in the market, we don't have an economy, right? So Canada's adverse scenario is here, except for real estate prices. Macbeth points out all of these indicators have been breached, except for house prices. Again, and this is why we do trends in the housing market. This is why we've been doing this show for so many years. So guys, here's the channel right here. Okay, you want to watch this, Canada's middle class in serious trouble, you want to watch that video. So there it is, upcoming live streams, trends in the housing market. Go ahead and set your reminder for that if you can. Also, guys, these are Mike of the Night shows if you want to come in and talk about stuff. We got call-ins from all over the Commonwealth. You want to watch this show as much as possible. It's really good. And there's trends in the housing market for last week, call-ins from all over the Commonwealth discussing housing in your local neck of the woods. So GDP, so it also happened much faster. Okay, Macbeth points out almost all of these indicators have been breached. So again, the lifelines, the lifesavers, the life jackets, the everything that's been keeping this Ponzi scheme afloat, and it's housing that hasn't been. Housing is the only thing that needs to drop. So everything went down except for house prices. It also happened much faster than expected. GDP has dropped 8.2% annualized, matching the decline of 8.2% as seen in the scenario up here. And he also points out that unemployment has peaked at 13.7% in May, pushing over a point higher than the target. He also points out since unemployment was 5.5% in January, this is an increase of 8.2% percentage points through to peak, adding the situation exceeding the worst case scenario. Everything but real estate prices have dropped, but Macbeth highlights this recession is still fresh. According to the CRA, real estate prices have actually increased 2.3% since March. So we covered that on the show. Prices are still going up. Could this be a melt up, or could this be... Now, again, go back to what I said earlier, and I'm asking Better Dwelling for this. I want to ask them, is there enough foreign investing in Canada that it doesn't really matter anymore if the local Canadian can't maintain a job, right? So the size of the decline unlikely across the board of current perspective. However, it's not ridiculous for some segments. Toronto condo prices are only down 1.4% since the peak. A substantial decline would need more negative indicators to climb. However, Calgary, Edmonton condo prices are down a whopping 17.36% and 30.71%. Again, Calgary and Edmonton, if you guys remember trends in the housing market we're discussing, Alberta's open for business where they don't care about the oil, the resource, or any of that. Alberta's open for business for foreign investing. A lot of real estate agents were hired from BC to go and use their counterparts from China or their investors from China to look at Alberta as a potential. And a lot of them didn't buy in Alberta, so Alberta did not do well when it came to foreign investing. They were running ads for a while, and it didn't come through for Alberta. So that's what happened. From their peaks, respectively, had you told someone at the top of those markets that real estate prices could drop, even if oil consumption increases, they probably would have laughed in your face. Sudden shifts in economic environments can and do happen, and sometimes they breach the worst case scenario. Outlying scenarios are tested for because they are possible and do happen. A rapid deterioration of the market only happens when people don't expect it. Otherwise, they could have planned to avoid it. So guys, let's go to Better Dwelling here, and if you type in Better Dwelling search, so we'll type in let's see if that article comes up. Okay. I'm not going to find it like that. I'm going to go ahead and find it here from Better Dwelling. Canada. It's already on my search, that's why. Here it is, guys. So this is by the same guys, Better Dwelling. We've been following these guys for years. Canada would be in a recession without money laundering. So the amount that was shadow flipped, we only got from 2001 to 2011, 2015. And a lot of it's shadow flipping through real estate and stuff. So now my question to you guys is $200 billion. That affects any economy. And that's what they're allowed to show us. Not Better Dwelling. I mean, that's what they could find. That's out there in the surface to find. So the Liberal government shut down the money laundering scenario or the money laundering outfit through the RCMP because they said they don't want it. There's no point, right? To investigate this any further. But the problem with this is when you start introducing foreign funds in huge amounts of numbers, look what happened to Seattle. Everyone, once Vancouver put the foreign buyers tax in the tail end of 2017, guess what happened? Everyone went to a frantic pace in Seattle to buy up their housing. Foreign investors skip Vancouver in a frantic pace to buy up in Seattle. Look at King County now. They're blaming the tech workers, which is not them for driving up the prices. It's foreign investing. And that's what's happening, guys. So my question is there enough foreign investing already in Canada that the Canadian proper themselves make no difference in the housing market anymore? And the ones that do have housing or own housing won't go down in pricing, or if they go down in pricing, they couldn't care less because it's older money and they already own free and clear. They couldn't care less if the housing goes down or up. I look forward to reading your comments, guys. Hopefully Better Dwelling can answer this question for me. Let me know what you guys think. Thanks for watching. Lots of love, and we'll see each other tonight on Trends in the Housing Market.